Bitcoin has seen a short squeeze at the $25,000 level that has pushed us all the way up to test structure resistance at $27,000, also testing this ascending structure resistance on the broadening triangle pattern. Now, are we going to break up above this triangle pattern, or are we going to drop all the way down, absolutely crashing in anticipation of the FOMC meeting coming up on March 22nd? There's a lot to go over today, so be sure to follow along. And before we get started, I want to let you know today is the last day, our last day to get access to all 11 of Trade Confidence indicators for up to $450 off. More on that later, but for now, let's get into the analysis. How's it going, everyone? My name is Jake, and we are on the tradeconfident.io website. Before we get started, if you enjoy this video, please like and subscribe for more crypto content, education, and analysis. And with that, let's check out Bitcoin. First up is the Bitcoin emotional index here, and you can see as the price has just absolutely skyrocketed, we have stayed within excited territory. Most often when we're in excited, or if we do end up pushing up into greedy, that's when we're seeing moves back down into the market. Next up is Bitcoin long versus short trades here, and we can see long trades have increased today with short trades decreasing after $150 million was liquidated. Next up is the Bitcoin whale smart money metric, and you can see here we have more orange bars to the short trade side. This tells me that we are more likely to see short trades coming soon, as whales are likely to hit structure resistance on this line up here and begin moving the price back down. Of course, we're looking for a metric value of -800 before we really see any major moves down. Not quite there yet, but we are getting close. Next up is the Bitcoin volatility breakout detector, and we are still in high volatility right now after this insane move up in cryptocurrency. We may see a little bit of distribution up here, and if we do, I think we may see volatility lower a bit, but I think it'll be difficult to hit low volatility. If we do, though, that's when we're going to be looking for the next impulsive move. Next up is the Bitcoin major support and resistance chart, and we currently have structure support at 25,288 and 24,262. There are no structure resistances on this chart right now because we're currently at the highest price that we've seen since early October of 2022. Last but not least is the Bitcoin daily trade scanner. We did get a strong sell signal back here, and most often that will be an indication of a move back down in crypto. However, whales decided to cause a short squeeze and pump the price up to $27,000. So as of right now, the strong sell signal has been invalidated. However, if we reject this structure resistance, I think we could be seeing much bigger moves down. So, and if that plays out, I think this was actually a good strong sell signal. Now, if you want to get access to all of these metrics and more, including Morning Brew Overview, Future Forecast Fridays, which have an insane win rate, by the way. We just sent out an email about that, and I'll talk about it next week. But you can get access to those, trade setups, and more with our membership at the links in the description. Just go ahead and scroll down, click show more, and it'll be the second link right here. Go ahead and click that. It'll bring you to our membership page where you can get full access for $59 a month. This will give you access to all 20 coins worth of metrics and members only content in the form of Future Forecast Friday, Zoom coaching every single month. You'll get access to our currently 100% win rate scalping trade calls, all of that and more if you click subscribe right now. Follow the prompts, and with that, we hope to trade with you soon. Let's check out the live charts. Before we get into it, this is the article, $150 million crypto shorts liquidated in 12 hours as Bitcoin holds near 25,000. We're actually far above that. This is how we know we saw a short squeeze in the market that shot the price up. Now, previous day's price prediction did play out. I did feel it was possible that we could see a move up in the market due to the fact that whale money was pretty low on its chart and still moving up. We did get much higher on the trend exhaustion and much higher on the price versus whale money flow as expected as we tested the structure resistance. Now, if we get another sell signal at this point, I think this, because of the extremely strong structure resistance, could be the point that we actually see moves back down in crypto. But again, we need to be looking for price versus whale money flow high, trend exhaustion to be high, and a sell or strong sell signal at that point. However, we do need to be aware that another short squeeze scenario is possible to play out. Here's why. Let me show you this real quick. This is the CME Bitcoin futures. Most often, if you see a gap in the market, like you can see right here, there was a gap where there was just no price action. Most often, the price will eventually move to fill that area. You can see it happen right here. It happened right here. And we have up here a massive gap between right here, 26,780 and around 28,800. Let me remove this for clarity, but we are right here. We are so close. And if we get another short squeeze, I think it would rocket straight back up to, let's get right here, $28,880. Super easy, and I think it would fill that gap. So that is the bullish prediction, but this is only going to happen if we break this ascending structure resistance. Again, though, indicators are really beginning to show bearish sentiment. Price versus one money flow high, trend exhaustion high. I think this could be the indication of the next move down. Now, are we going to move all the way back down, way down here? I think it's absolutely possible, but if we have to keep in mind, it'll take several days, possibly even a couple of weeks before we move all the way back down to that point. Now, this isn't necessarily bearish overall. This is just continuing a sideways movement within a symmetrical triangle pattern, a broadening triangle pattern more specifically. And what this tells us is there is more and more volatility building up in the market. As these swings happen, more and more money is moving back into Bitcoin until we eventually break out and see massive moves. And just because of the timing, just because of where we're at, very near the bottom of the Bitcoin bear market, I think this will eventually break out to the upside. And I think that's going to be a massive move when it does happen. We don't have current price predictions for that right now. Unfortunately, there are macros in the market right now that we need to pay attention to as well. With 3 banks having dropped, with one more kind of on the chopping block, it looks like it's being bailed out right now. But if banks continue to be bailed out, this will increase inflation, the inflation that we've been fighting for nearly 2 years now. And if inflation rises, it's more likely that we're going to see rate hikes increase much further than previously expected in order to combat that. However, in the FOMC meeting coming up, it's very possible we're actually going to see a 0% interest rate hike. And this is just because of the absolute chaos in the market. If the Federal Reserve chooses to increase interest rates even further, this could cause more banks to break down, which is just going to cause even more chaos in the market. And that is not what we need, guys. So that's why I'm thinking a 0% interest rate hike, at most 0.25% if they decide to continue. Because at this point, they're having to choose between saving banks and increasing inflation again, or combating inflation and possibly breaking more banks. It's not real. It's kind of a lose-lose scenario either way. Unfortunately, it looks like they're already bailing out banks, so it's very possible that inflation is going to increase a little bit in the short term, which will increase the need for interest rate hikes in the long term. This is where this extreme volatility is coming from. So, price prediction in the long term. Let me clarify. Long-term price prediction here, somewhere around this area, around the $18,455 mark if we see bearish moves down. I think that could be the move in the very long term, just to continue playing out this broadening triangle pattern. In the shorter term, if we do actually end up breaking the structure resistance, I think a move up here to $28,880. I just want to reiterate, though, this move down is going to take quite a while if it does happen. It could take at least 2 weeks, so please keep that in mind. Now, if you want to get access to all of these indicators that are really helping us gauge this market, especially the price versus whale money flow, is going to be extremely important as we continue trading. Where whale money goes, the price is likely to go too, and this is why this is my personal favorite metric. If you want to get access to all of these, you can get them for up to $450 off. Today is the last day. The sale ends at 5 p.m. Pacific Standard Time. If you want to get access, you can find the indicators at the links in the description. Just go ahead and scroll down, hit show more, and it'll be the very first link right here. Go ahead and click that. And again, the indicator sale ends today. In order to get the best possible deal, you're going to want to grab the bundle pack first with code SAVEME50 for $50 off at checkout. The bundle pack will include the trend exhaustion and price versus whale money flow indicators, as well as 7 more free to use. On top of that, it will include a $400 off coupon for the TC top and bottom finder. That accounts for the full $450. With that, purchasing all 11 of Trade Confidence indicators is actually cheaper than buying just the TC top and bottom finder alone. So I say go for the better deal and get more indicators for your trades. No matter what you get, it's lifetime access for a one-time payment, and you get full dedicated email support. And with that, thanks so much for watching. Trade safe, trade confident, and I will see you in the next video.